In this video, we show you a fantastic method to find great stocks. The search with a stock screener. Hi, my name is Till, and on this channel we show you how to invest smart and intelligently without having to change your life, and how to build up a fortune as a normal person. When you're new here, hit the subscribe button and ring the little bell for not missing any new videos. One of the few important pieces of the investment puzzle is to buy one or two handful of truly great companies, where you understand the business in depth and where you can predict the future development of the business and the company with some certainty. But before you can actually buy those great businesses, you will have to find them. There are several methods to do this. Some are better, some appear to be good but are actually not worth to look at. One of the best ways is the search for businesses by stock screeners. I personally rate them as my second favorite method to search for and find great businesses. In this video we show you the advantages and disadvantages of the search with stock screeners. What you need to look at to improve the quality of your results and become more efficient with using them. And we show you how you actually use them. So let's get started. Advantages and disadvantages. Stock screeners are a highly mechanical way to find stocks. You do this by basically asking a machine/a database to check a huge amount of companies by certain criteria. The machine then checks all of the entries if they fit to the criteria you asked for. This is in principle not as bad as it sounds. There are tons of companies out there, and every company has its specific characteristics. This is already one of the major advantages. You can crawl through literally 10,000 of companies in an instant. A second advantage is that the results of your stock screens usually contain a lot of companies. And the more companies you're presented, the higher are the chances of actually finding some great companies between them. The major disadvantage is that the results usually don't say anything about the quality of the companies. Although you will receive a lot of companies that fit the criteria you search for, these criteria are usually number-based, and this isn't going to give you any indication for the qualitative analysis. So, when you have the results of your stock screen, you will have to do the qualitative analysis for all of them, from scratch. The quality of the results. The quality of the results depends on a few factors that are not always the same at the different stock screeners. One factor is the types of criteria you can search for. Some screeners offer several types, others offer only a few. Important is not the quantity of the different criteria, but the quality. There is a lot of BS out there that you can search for that doesn't help you at all to find great companies. Another factor is the possibility to combine different criteria. Some stock screeners only offer to search for one criterion. With other stock screeners, you have the possibility to combine them. This is making it much more efficient. A third factor is the content of the database. So basically, the companies that are browsed. This is pretty much self-explaining. The more companies the database contains, the more possibilities are there to find some gems. When the database also contains the companies of several countries, the chances to find something become even bigger. Some of the screeners have a reduced functionality in the basis version. When you subscribe for the premium version, you will get more possibilities and criteria to search for. Often, these screeners offer you a free trial of their premium version. We suggest that you first try out the different screeners that are out there and make yourself familiar with the possibilities and what you actually require and what you want to search for. When you acquired a better understanding, you can try out the free trials of the premium version. Don't subscribe for all premium versions at once, as your free trial is usually limited in time. When you know what they offer in their premium versions, you can decide if you actually need those additional features and criteria or not. Which stock screeners are out there? There are several screeners out there. Morningstar.com belongs to the really good finance sites. Also, their stock screener is good. You have to register for using their basis version. Yahoo Finance also has a good stock screener. I personally used their services already for a longer time. That's why I'm using them often as an example in my videos. TradingView.com offers a screen for price to free cash flow ratio already in its basis version. This is really interesting for value investors. It definitely belongs to the really good stock screeners in general. Further stock screeners are oldschoolvalue.com, finviz.com, ft.com, this belongs to the Financial Times, marketscreener.com, gurufocus.com, and zacks.com. Even Google once had a great screener. Unfortunately, they took it off their site a few years ago. The order of the screeners is arbitrary. Some are better, some are worse, but I personally don't have an absolute favorite. I tend to work with several of them. Remember the quote from the famous investor Peter Lynch: "He who turns over the most rocks wins the game." Examples: how you actually use a stock screener. As mentioned, there are several screeners and most of them offer a ton of different criteria to search for. We now show you 3 examples that cover 3 different indicators, and we use for every indicator a different stock screener, so that you have a better impression on how the different screeners work and where they have something in common. The first screen we're doing is to filter for the price to book value ratio. The target is to find companies that have a beaten down price compared to their book value. For this, we're using the stock screener of the website finance.yahoo.com. Log into the site and click on Screeners in the menu. You see that there are already several screeners prepared that you can use if you want. But we don't want to use a pre-filtered screener. We want to build our own new one. Click on Create New Screener. You see that a page opens with some criteria. You can add additional criteria by clicking on Add another filter. Let's do this. A menu opens up with a ton of different filters. Scroll down to the section Valuation Measures. In this menu, you click on the checkbox for Price per Book Value filter. Then you click on Close. In the next step, you need to type in the value that the screen should use to compare the stocks with. For the price per book value ratio, a lower figure is usually better than a higher figure. Let's type in 1. 1 means that the price of the company that you can buy it for at the stock markets is the same as the book value of the company. Lower than 1 then of course means that you pay less than the company's book value for the company itself. Now click on Find Stocks. There now is a smaller but still huge quantity of stocks that all have a book value of equal to or lower than 1. You could analyze now every individual company, or you would apply further filters to reduce the number of businesses to go through. If you want, you can save your newly created screener for the next time. For that, click on Save Filters. The second screen we're running is a filtering by the 5-year dividend yield. We used the screener of the website zacks.com this time. In theory, we should receive companies that pay dividends over a longer period, but are still cheap. Hover with the mouse pointer over Screening, and then click on Stock Screener. Now you scroll down to the menu item Dividends and click on it. We use the second entry in the list and leave the operator at greater or equal than. Then we type in for this operator a 5. The screener now searches for all stocks that had a dividend yield of equal to or greater than 5% over the past 5 years on average. When you hover over the little information sign behind the description, the exact criterion will be shown. Click on Add. Now click on Run Screen. There have been found more than 500 companies that you can now analyze or narrow down even further. The third screen is a search for the price per free cash flow ratio with the website tradingview.com. I mentioned already earlier in this video that they provide this feature and that it is actually not that common. At first, we hover over the menu item Screeners and then click on Stock Screener. Now a pre-filtered screen opens up that contains some typical filters, like for example the PE ratio, market capitalization or EPS. As we want to have a different filter, we click on the 3 dots on the right. You see that another list with checkboxes opens up, where you can choose from many different filters. We scroll down to the before mentioned price per free cash flow ratio. Here it is. Let's click on it. Now the program instantly adds another column to the screen with our just selected price per free cash flow filter. Now we click on the blue button with filter as we want to set the filter in the next step. Firstly, we reduce the search parameters so that the program just searches for common stocks and not for ETFs, etc. Then we scroll down to the price per free cash flow filter. Now you can choose the respective operator you need and then set the figure that triggers the filter. We choose below or equal and set the filter value to 12. Then we hit Enter so that the filter will be applied immediately. We close the window with the filtering options and are now able to scroll through the results of our screen. There are already a lot of filter results. We have more than 500 matches. All of them have a price per free cash flow ratio of equal to or below 12. Also, with this screener you can now analyze the filtered companies, or you continue to narrow them down by adding further filters. Generally, please have in mind that those are just individual criteria that might reflect only a momentary view of the stocks. For example, a screen for stocks with a huge dividend yield might also show companies that paid a high dividend the last time but had a critical development since then and the dividend has been reduced meanwhile. Using 5-year averages already reduces this risk. Use the stock screen always just as an indication, never as a decision basis for buying stocks. You have to do your homework afterwards and evaluate the filtered stocks deeply in terms of quantitative and qualitative analysis. So, the best way to start is just to actually start and try the stock screeners out for yourself. Try not to be overwhelmed by the sheer quantity of the results they offer. It takes some time to become familiar with them and get the results that actually help you. Let me know how they work for you, if you found some good ideas in businesses or if you had problems with using them. Drop your comments and opinions in the comment section below the video. If you like the video and if you want to know more about investing and how you can build up a wonderful fortune, hit the subscribe button. Don't forget to ring the little bell, and you can of course also browse through the other videos on my channel.